You've decided that you need to sell your investment property, and your accountant has told you that you're going to have to pay capital gains tax unless you do what's called a 1031 exchange. Hi, my name is Jeff Helsdon. I'm a business and real estate lawyer in Faircrest, Washington, and I have been helping people do 1031 exchanges to save on capital gains tax for 22 years. So what is a 1031 exchange? Well, Section 1031 is an Internal Revenue Code provision that allows a taxpayer to defer any tax on the capital gain that they otherwise would have to pay when they sell an investment property if, instead of selling the property, they exchange it for another property of like kind. This is a non-recognition provision. What it really means under the code is that the gain that the taxpayer has realized, which is a term that's used under the code, realization of gain, will not be recognized if the taxpayer complies with the statute. The requirements are that you must have property. It can be either real or personal property. It must have been held for a qualifying purpose under Section 1031. And the kinds of properties that can be exchanged are properties that are either held for a productive use in a trade or business or for an investment purpose. The property must be exchanged by you for another property of like kind meaning any piece of real estate that has been held by you for an investment purpose can be exchanged for another piece of real estate that is to be held by you for an investment purpose. There must be an actual exchange of properties. If you were to sell that investment property that you have and then later buy another property, even if it is of like kind, it's taxable. You cannot sell and then follow that up with a purchase and comply with Section 1031. There must be an actual exchange of properties. And the same taxpayer who sold property must be the taxpayer that acquires the next piece of property. So what do? Now that you've decided that this is something that you need to do to try to avoid having to pay the tax right now in the year of the sale, to use that equity so that you can go up into a higher valued property with a greater income potential. So here's what I want you to do. Pick up the phone and call me. I can help answer the questions that you still have remaining. I'm Jeff Helsdon. Thank you for watching and have a great day.